Hello, testing 1, 2, test. Got my YouTube up. Brian here from quantlabs.net. We are now live on YouTube. Right on, right on, right on. Okay, so let me get my screen shares going. So usually I just do my whole entire desktop. There you go. All right, so let's get to everything. All right, welcome. Today we are going to talk about the continuation of all the indicators that I'm planning to use. And essentially what we've got is to use. All right, it's got some feedback here. All right, so as I said, I'm continuing along from the feedback of last week, and what we've been working on has been pretty cool. So I'm going to show you the backstory where we're at over the last week or so. So let's go under here on my channel here on Quant Labs of YouTube channel. So everything started working first on Fibonacci's, where I'll go over the details of that. And right here, this video here called Using Fibonacci Retracement Level for Price Target Moves for Support and Resistance, that was put up 5 days ago. So I'll show you that video. I'll talk about that in a little bit. Then we moved into a different type of trend line. I'll detail that as well. There's an upper and lower trend line, but that can be a screwy setup. So I'll detail that in a minute or in a little bit. Also, I started looking at moving averages for potential market reversals. That led me into areas of essentially moving averages. And that, as I said, that led me into Maribozu or Mariboza lines. And that led me into the world of Candlestick patterns, and that was all due to TAlib, a Python package. I'll detail that in a while too, and that I've done some further analysis on that. And that came out of the Maribozu, which is a candlestick pattern. And then we moved into general reversals with a variety of different function or other patterns provided by TAlib. I'll go over that in a little bit. And then I just posted another one. What are the more reliable candlestick patterns? So that led me to here where we are earlier today. What are the most accurate candlestick patterns? So these are all the topics I'm going to cover. So I'm going to kind of whiz through it. If anybody's got any questions, by all means, you can chime in on the YouTube chat if you want or whatnot. So let's first talk about Fibonacci's. And really, I've done some changes to it. The one chart that, now again, I don't care what you say about the data. That's not what we're talking about here. What we're talking about is the mechanics of it. So that's what I'm going to be focusing on. So we have here a Fibonacci chart, and really important is, again, this is all Chart Director that creates this. So here are all the Fibonacci's level for this price move, okay? And this is daily charts. I don't like using hourly, monthly, weekly for the Binance data on the cryptocurrency. I can only really work with either hourly or daily or monthly. Those are the only periods I have. So I really like working with daily. It's a lot more useful for me. So at the end of the day, what we need to figure out is the Fibonacci retracement levels. Now, this retracement level is kind of different from what I've shown before, where I was just using it for evaluation at the most recent time. In this case, this is, I believe, over 200 days. And how this retracement is captured is from the lowest on this chart or this time series to the maximum point. Now, the point here is that we have here the close of the open, high, low close bars. But what I'm actually using is the lows in this particular bar and the high in this bar, and then figuring out the min and max of those and drawing the Fibonacci levels based upon that range. And this is where we're at. So it's a much better accuracy. And here we have a 50% line as well, or a 0.5, and then the usual 0.236, 0.382, 0.618, and 0.786. So right now we can tell that this price is in our golden zone, which is good for valuation from a historical point of view. But we can also use a variety of other indicators to measure direction of this price line. If it'll go up, can we also set price targets? So this is a really good retracement level, because you can see it's exactly between the historical minimum and the historical high, which is good. So that is what we're trying to gauge, is we're trying to use these retracement levels as a potential entry or exit. And then there's, out of that, we're using a support and resistance. So in this case, we could set right here the 0.5 as a resistance, or we could step it down and put the 0.618 line as the new resistance if this price continues to fall. And then we can have a rotating support and resistance set of lines. And you can use the retracement levels as one way to do that. So that's the Fibonacci retracement. Then we get into trends, and trends are totally different from what I've shown before as well. So in here, I've started to branch out a little bit into using other cryptocurrency pairs. So I'm going to show you a couple of examples. They're really, it's very hard to develop these. So I'm going to show you the logic that I use to generate these. So I'm just going to pick up a random chart here. So here, what we have is oh, I'm sorry, I forgot to mention something as well in the Fibonacci's. Really important. Okay, going back to the Fibonacci level. I forgot, I've got this text below here. These are the current price levels at these Fibonacci levels. So these are the pricing here, and whereabouts these Fibonacci levels are at on the y-axis, which is obviously the close price. So for instance, we have 0.382, and that price will be set at 0.382 right here. So that would be like 0.01174 right here. So that's what these data points mean. Just so you know that, so you can precisely measure where, let's say if you wanted to use this level 0.618, we could potentially say at 0.618 level, we could set this particular price as a new resistance or a new entry, but we have to figure out that there's other factors that will drive that price. So Victor's got a question. Okay, Victor, I saw some harmonic pattern videos from you elsewhere. Yeah, that's right. I'm not going to be talking about harmonic patterns tonight. But yeah, you're right. I did talk about that, but that was quite a while ago. But these Fibonacci's levels are generated from those to generate the maximum minimum points or the peak and troughs, and that's using some Python code to do that. So moving ahead into other trends now, as I said, I was going to bring up this guy here. No problem, Victor. So here, the trend lines is kind of interesting. I have to tell you, probably the most difficult part of the entire trading process is just the general up and down moves of price. And it's very hard to determine just to get some form of consistency across all of these currency pairs. So for instance, in the Fibonacci, we have all of those different levels that we can use for different factors to gauge an entry and an exit. So here with the trends, these are no different, and it's very difficult to be able to determine a trend line, and it's very difficult to do. So the programming logic is we have this price right here, and what I've done is I've tried to take a previous maximum, the maximum of a line, and be able to generate that, and then use the previous maximum to be able to draw a trend line. And then also at the same time in this trend, everything moves in factors of 3. So what I mean here is we have this trend line, we have this potential maximum, and it could also be a minimum, but in this case we know it's a maximum. So what we're trying to do is we're trying to draw a trend of the maximum to here, to here, to here. And what we're trying to determine is when will that price for the third time touch that line. In this case, we can see it's hovered it and broke through it multiple times. So essentially, we know the price is above this trend. As with the lower trend, if you can call it that, is we can use that as another way to generate a potential new resistance or new entry target, no different than the Fibonacci levels, to determine if the price, let's say, goes through that line. We can hopefully bounce off that line. But usually what we're doing in the programming logic is we're trying to draw a trend of the previous 2 touches at the same time, figuring out what the minimum and maximum of these lines are. So for instance, in this line, we have this point here, and somewhere along here, these 2 points where it's calculated if the price does go through that, do we use that as an entry or an exit? So this is where this really helps out. So we have these up trend lines and down trend lines. So we figure, we're trying to calculate what our target will be using these trend lines. So if the price breaks through this, we can use that as a target, as a historical high on the trend line or regression line, and be able to determine that if we know that that price may break through this target, that we may have some form of a trend because it's breaking through that trend, and also can be set on the downside as well. So here what I've done is I've got three points on the on these trend lines, the first 2, and the third one, it's setting, because it's drawing a regression line, it's saying on the third point, we're using that line or that expectation or the target of the price by doing some polynomial and regression calculations. And then if the price does break through that trend, we should be able to set that target using this third price. And I do the same thing for both the uptrend line and the downtrend line. And these are the exact price points that current price needs to break through, if that makes sense. So it's sort of like an automatic target. And here are the timestamps for at what points these the price did break through these trends for the 2 previous points. And they're usually, this one would be the highest or the peak, and this would be the previous point. And then this third one is where that price will be set as a target and expected. If the price, let's say, continues up, we would expect the trend to be broken when it hits this price level. And same with the downside as well. And sometimes if it's so tight, what will happen is you will get both pricing set at the same time. And that's just a mathematical thing. If the pricing is so tight here, as you can see, the precision, it's literally next to 0. So you're going to get these anomalies as well, which basically saying, another way of saying there's no trend. But we can do it mathematically if we wanted to analyze that. So one of the determining factors for that is you got to use volume as a way to determine if you actually have some form of a trend. And this is because of the markets that we're in right now. So if I showed you some examples, like really extreme examples of these trend lines, you can see literally right here that there's just no trend here. And it's so flat. There's no movement. And that was as of last week. So that's how bearish the cryptocurrency markets have become. So there are other examples where you can get some nice trends. So let me just see if I can find some here. So here we can see using these trends, this is another way of forming, if you followed me weeks ago, to generate wedge lines or wedges. Well, this is how they're done, is based upon the previous max points on those trend lines. So this is how they get drawn. And here we could say we could have a wedge, but obviously the price is already broken through the lower trend line. This is not a really good example, but let me just show you some. So here's another example where it's done the opposite type of wedge. This could be even considered somewhat like a flag, if you want to consider that. And this is all driven by math. But there's some nice trends that you can get, if I can find one, where the price does stay within a range, like here. So you can see here, the price is going down, but this trend line right here is if the price does break through, we could use that as a potential entry point, or at least to say, that could be a new resistance line instead of this one, because the price is broken through the upper trend. And as a result, we can set that as a new resistance, a new support line. So I'm just continue finding a good set of, so here you can see it's above trend, and that's you're dealing on literally pennies in profit because it's above this trend. So and you can't short in Binance as well, but this may have been a really good shorting opportunity. But these trend lines are kind of useful. Again, we have a wedge forming, but our price is pretty well broken it already. So what we do here is we could just say, it's broken trend, so let's now create a new support line, and then use maybe a Fibonacci might match up to this or not. But it's all these different factors that really determine. So right here we have a nice somewhat of formation if this price was to bounce off this one trend line. And sometimes they do, sometimes they don't. Let me just show one more. I'm just going to randomly pick one. I don't think I've shown this one. No. So here you can see price is kind of bounced off of these lines. And always remember that we're looking for in multiples of 3. So if this was 1, 2, 3, but it still has not broken the lower trend, it's just bouncing off it. So there's literally multiple examples here that throw everything that it's really tough to get a consistent strategy out of this. So you have to build a variety of different trading rules to be able to determine when an entry point happens or not. Okay, so those are some tough ones to work with, to be honest. Okay, but doesn't mean that it can't be done. How about ETC? That's from KevBot. How about ETC? ETC. Oh, I see. No, I don't have those due to the fact that, because I'm just focusing on the mechanics of this, so there's no ETC. And I also should mention that sometimes trend lines don't get charted because of the math don't allow it, where there's maybe not enough data, it's too tight, and it throws an exception in the program. And in the script, I just have it reject, and it doesn't chart anything. So these ones I'm showing you are the ones that are actually you're able to chart. So no ETC. Sorry, Kev. All right, so let's talk about the averages. Now, this is just focusing on one particular cryptocurrency pair here. This is ZRX against Ethereum. So I'll start now. Always remember that cryptocurrencies never close. So you can literally use any trading day. So I've got one for 365 days. Again, we got momentum, RSI, and our usual moving averages of SMA 20, 50, the EMA at 200, which is a slow moving, Bollinger, and our volatility. Now, that's the 365 days, the 240 days. Again, it does get easier as time passes. So here's a 6-month chart. But you can see here, it has somewhat come back a little bit. Actual fact, if you look back here, it pretty well, from January till about now, well, up until a certain point along here, you would have doubled your money if you did that trade in this particular cryptocurrency. So here's a 3-month chart. It gets a lot easier to analyze because what we can do now here is we can start playing with our, thanks for the like. We can start playing with the candlesticks. And here it gets really interesting once we start applying those candlestick patterns to try to measure a form of market reversals. So here we have this big line, and that would have probably caught a candlestick pattern, but we'll go over that in a little bit. And some of these run-ups as well. And we also have the wicks now as well that we can measure. We can also look at the moving averages as well. Let me give you a tip about moving averages. We obviously have our SMA 20, 50 above the 200, which is good. Because if we have our EMA, the 200 above these SMAs, that's obviously classic. We are in classic bear mode. So Kev asks, how do these clouds function? All these clouds are just this, Bollinger Bands. That's all they are. So you can see here that these candles have pushed up against the upper range. And at some point, they'll crash, and that's what's happened here. And here at this Bollinger, it's bounced back. It's the same. You could say the same thing with the RSI as well. So yeah, these are Bollinger Bands. And one thing I was going to mention about the wider the SMAs are, the 20 and 50, the more trend we have, the better. And the other thing is when you start to look at here, how the SMAs, the 20 and the 50 are starting to tighten up here. They starting to move less, and the range at which they move is not, it just doesn't move up. So there's always consistent buying pressure or selling pressure. And this is why we have either these bars get tight. We get the occasional pop here like this. But overall, long-term is that they get compressed and eventually they fall, as you can see here. And in this case, this is another example of this where it did go into a range bound, and the RSI where things started to get overbought. And as soon as this hit, boom, it moved up. But still, you can always tell by the volume as well, where it goes range bound, where the volume does dry up. And once it starts to move up a little bit, you'll get more volume as well, because that drives, everything's all intertwined, as you can imagine. And then, of course, it's all related around momentum as well. But the point here is on the moving averages is you want to always watch how the SMA 20 and 50 tighten up, and also make sure that your EMA 200 here is below the SMAs, because then we're not in a bull market, classic bull market, but it's better than a bear market. So that's what's been kind of going on here, I would think. So when you break it down into more a 30-day, you can see exactly what's been going on, where we have our pricing drops. And That's all because of sales pressure. And then we get into these candlestick moves. So I'll show that in a minute. So you can see here as the RSI, it does show that as the price comes down, the RSI comes into a undervalued price right here historically. And at some point, we can expect that price to be driven back up. And then it will drive up momentum as well. But the averages, you can see how tight they are. You think that there's just one line there. That's how tight they've become. And it really becomes very difficult to trade in these kind of environments. I mean, there's some bit of the SMA, two SMAs diverging a tiny bit. Doesn't change a lot, but that's the key, is to watch how these diverge. Okay, so those are the moving averages. So now, any questions so far? So I've shown you the moving averages. I've shown you the Fibonacci's, and then I've also shown you the trend lines. And those are standard, classic, but very simple, what you hope are simple technical indicators. I don't think it can get simpler than that, to be honest. All right, so let me take you into the candles. Now, also, was it Victor was asking about the harmonics? Actually, I'll mention that earlier or today if you want. Now, the harmonic patterns I'm going to show you are not exactly up to date. You can see these are probably 2 weeks old. But if I wanted to show you, now again, I only like working with daily harmonics. So here we have a 1 day, and then we have a few hourly ones as well. So I'll just show you the daily. So here we have a bat. It's gone bearish. So what does this mean here? At this point, we should be able to expect this price to drop. That's what we'd expect. But then we can overlay all the other examples looking really to confirm that are two things, is the momentum. If the momentum's dropped off or the averages have tightened up, meaning that there's now and no more trend, we can also look at the trend lines. On top of what I'm about to show you, you can use all of these combined to confirm with each other. And that's the whole point of this. So I'll continue just to show you some other bearish, so we have here another bearish bat. So there's 4 types of harmonic patterns. There is bats, butterflies, Gartleys, and ABCs. So these really help to determine the patterns. Harmonic patterns are really useful. So I'll try to show you a outside of a bat. So we have a crab here. So we have this pair here. Again, we expect this to turn at some point because it's a classic bearish crab, according to this script, according to this chart. Okay, so again, you can use all these combined to figure out your market reversals and if you are going into a bear or a bullish mode. And again, I'm only really wanting to focus on the daily data. The hourly data is really good for when you need to confirm things to see what's going on in terms of if there's a trend breakout brewing on the hourly level. So that's pretty good to have. Now, what I'm going to show you now is the candlesticks. Give me a second here while I bring it up. Now, I've been working on this since Friday, so these are fairly new. So I've been running these. Now, let me show you the videos where to go to get these. Candlesticks are really good, but again, accuracy is a real problem. Now, fortunately, there is a site called thepatternSite.com. And what he does, let me better do a better search than that. The pattern site, I'll just bring up a pattern like the hammer or something. Okay, so I'm going to load up this hammer candlestick pattern. And what he does, he goes through all of what it looks like, the description of it, percentage of accuracy here. He measures performance against 103 different candlesticks. Does a pretty good job. And so what I did was, and here's an example of this hammer right here. So what I did was, in my blog, if you go to it, I did this last week. So you go in the Candlestick. So if you look for, I think this would be it. Okay, yeah, so it'd be this posting right here. So this posting here, reliable candlestick patterns for TA-lib pattern recognition as a bullish reversal. What I've done is I've gone through all of the available candlestick patterns that I have, and I measure going against the patternSite.com, and I measure how frequent is it, does it give you decent performance in terms of accuracy. So I've listed all of those here. So I've whittled them down even further. Actually, I'm doing this as a test. So in this folder here, what you'll find is probably, actually I can show you what I posted earlier today. So what I've done is, when I ran against 315 pairs, I came across about 8 different very common patterns that were detected. So I've gone in, I've measured them, I've tested them. Are they accurate? Do they work? Yes, no. These two, the Harami cross and the rickshaw man, I'm not sure if they actually work. So I've pretty well whittled it down to 3 that may be worth looking at. Now, I'm not going to say that these work all the time, but all the common ones out of these 8, these 6 look okay to work with. Again, I wouldn't rely on them totally, but again, they're very helpful to see if you have a market reversal. Now, if you watched me for the last 6 months back in December when I was playing with Duca's copy, I struggled after struggle after struggle for weeks on end, trying to figure out when can you do a reversal. That's why I don't like doing under 5 minute, under 15-minute time frames, because of the amount of false positives that come out of it. And I'd say about 75% of those so-called indicators that matched up, looked like it was going to move in the direction I want, 75% of them were false. And I'd be losing money. So I gave up on that. That's why I moved into the daily time frame, because it smooths out all that noise and that negative stress you don't have to deal with. And part of the problem was, because markets move in this random walk, it's very tough to figure out what will work in terms of consistently. And the ones that seem to work really well are the moving averages, as I showed you earlier. But then we have all these new tools that we can use combined to help us gauge on if we have a real market reversal on our hands. So these 6 that I've come across are not only common, but they have some potential to work or not. But I wouldn't use these exclusively, because you're going to have failure on your hands. But if you combine them with the other tools that I mentioned, I think it will help determine if you have a true market reversal. And another one that I showed you earlier, the harmonic patterns, combined with this would be able to determine, yes, you may have a market reversal based upon historical and how the candles play out. So let me show you some examples. So this is done earlier today. So all of these charts I'm about to show you are based on 30-day The analysis, this is just for purely testing to show you which currency pairs have some candlestick pattern and what you can do with them. So what happens is we've got the pair. Obviously, I'm only focusing on the daily time frame. I have listed the name of the pattern. And here's the important part. I'm using TA lib. So let me just show you that. So if you go into TA lib, which is, it's good and bad. But I think for the candlesticks, they may be okay. But they're definitely very convenient from a coding perspective. And in one of those videos I showed you, it has the entire code walkthrough. It's very simple to set up. But basically, we have these pattern recognition, which are really candlesticks. So these are all the ones I went through to see which ones are reliable, which ones are no good. And as I said, I've whittled them down to 6. These ones here that seem to work okay. So, and they're also the most common, as I mentioned earlier. So when you use the TA lib and you call that using this data set or your time series, what will happen is it does detect a candlestick pattern. It's either going to return a -100 or a 100. So that's basically another way of saying a bull or a bear for that particular pattern on that bar. And there's no other number. So it's just either 100 or -100, either or. So basically, in my charts, what I've done is, so again, as I said, these are 30-day charts, right? So in here, if it's been detected, this particular matching low at bar 19, we can analyze the bar and say, does it look good or doesn't it look good? So if I count back 11, so if I go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, this should be the bar that we are questioning for here, because it's on bar 19. And remember, there's 30 of them here. So if I look at this matching glow description in the pattern site, so if I go to the pattern site, need to make sure we've got the right bull or bear. So in our case, this is a positive, so that's considered to be a bullish candle. So so it's a bull, and the name of it was a matching low. So if I load up the description, I get some pretty good detail on a lot of things, as I shown you earlier. So here we can go through the description. We have here, looks like it's a bearish continuation, which it is, 61% of the time, 69% of the time meeting the price target on the breakout, and blah, blah, blah. So you can go through all of these different candlesticks. So when you go back to the candlestick of, where's my preview right here? We have two things that we could say. Now it's saying it's a bearish continuation pattern. So it could be these two. So, you know, it's just to confirm that, yes, you do have a bear condition continuing. Now, again, I can't say this is right or wrong, but, you know, it's just something that helps you gauge from a data point of view if you have a bear. And if I was to run, let's say, harmonic pattern, maybe at this point we may get a bearish pattern, a bearish harmonic pattern, and that for sure will confirm, yeah, you do have a bearish condition. So you can use all these combinations. But again, here you can always look at the RSI. You can see that the momentum has built. It looks like on the downside. You can see that here as well in these bars here. And then all of a sudden we have now this new bar that's gone positive. So what does that mean? Who knows? But it didn't I mean, I don't know if there was a call for it or not. And again, really important to remember that all of these candlestick patterns are measured over the last 30 days. So in my case, for live trading, I'd only go back maybe last 5 days or 7 days, a week, maybe 2, because some of these candlestick patterns take a while to form. So you don't want to go farther back than 2 weeks. But in this case, for testing, I'm showing 30 days worth of bars for these candlesticks patterns to see how they get detected. So again, we have a variety of these different patterns. So here we have a bullish pattern because it's a positive 100. It's a hammer. And in there, we shall see that this bar happened at number 13. So we go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Is this a hammer? Let me pull up the details on it. So if we go to the pattern site, hammer, and I believe that was a bullish. Yes, so that's a bullish. So we can detect inverted hammers, but I guess it's this one we want. And let's see what it says here. So 60% of the time it's accurate, a bullish reversal. But you got to make sure you read this carefully. Now remember, this is from a book, so you're only getting excerpts from this. But you could probably, if you buy the book, you could probably get much better detail. So this is supposed to act as a bullish reversal, 60% of the time, placing reversal rank. Once a price reverses, though, it does not travel far based on overall performance. So it ranks at 65 out of 103, which is average, I guess. So the frequency is not very common. Works 60% of the time on a bullish reversal, but when you look at it, if we were to assume this is it, how does this work? Do we say, okay, we have a reversal. Is this it here, this bullish, that it's gone up? I don't know. But you got to look at more of these patterns to be able to determine, to say, yes, this is the hammer, and then give it 3 days, and then, yeah, it did boom. But I can show you also examples where it actually continues to go down. So it's very important to understand that, but we're lucky that we have this as a resource to say, here's this guy who spent probably who knows amount of time to test these candlestick patterns, and we can use this to our advantage to be able to determine if we have a market reversal or not. So that's the logic of this stuff. Let me just pull up one more just for kicks. See, the rickshaw I don't use because I find it very unreliable. Same with a Harmonic cross. Let me show you the 3 outside. That can be pretty good too. So here we're using Storm Ethereum. We have our bar at that's a bearish bar at bar 22. Let me just pull up the info on it. So we have a what was the name of that pattern? It's called outside, 3 outside. Okay, so 3 outside. Oh, okay, let's go back to Google, the pattern site, 3 outside. Okay, so we are dealing with either an up or a down. Let's pull up the info. So we are looking for a down. So I'm going to pull that up. So here we go. So just as an example, upward breakouts do better by multiple of 2 or 3. Downward breakout is pathetic. So there's all these numerous examples that he provides. 69% of the time it's accurate on a bearish reversal. So here's what it looks like. Let's pull up that chart again. So if I go 1, so we're looking at 22. So I got to go 8 bars. 1, 2, 3, 4, 5, 6, 7, 8. So is this it here, you think? But either way, it's definitely in a bear reversal, and it's continuing as well. So like I said, some of these work, some of them don't work. But that's the direction I'm going in. So here we're able to set targets on pricing using the Fibonacci on top of the trends as well. Moving averages consistently work. I mean, there's no doubt on that when they tighten up. But the problem is when you get in this range bound that we've been in with the cryptocurrency market and pressure, like just nothing but downward pressure for the last number of weeks, it's a pretty tough trading condition. So if we're able to use these candlesticks, we can measure potential market reversals. But I probably still put a lot of reliance on the moving averages. But these will definitely help you combined with the harmonic patterns and these candlestick patterns as well to determine if you can somewhat say you have a true market reversal. And that's going to help you out. And again, you don't want to, I mean, you can literally use these on any asset class. You can definitely use them for any time period, even hourly. But as I said before, when you start working at hourly levels, it gets really noisy. And there's just a lot of negative, where a lot of these false positives. So yeah, there we go. Any questions so far? It's been just 50 minutes there, me blabbing. So that's pretty well it. It's a combination of everything. If you want to see some of the source code as an example of how to do it, as I said, my YouTube videos for the, let me just load up my YouTube channel here. If you got any questions, let me know. So if you come under here again, under, right here, market reversal with Marabuzu line, there I definitely show you some source codes you can see in the background there. And also this one as well, the most reliable candlestick patterns with TA-lib. Python demo shows you further source code as well. Anybody else got any questions so far, guys? Appreciate it. I'll have to wait. The next big thing is I want to put all this stuff into one report. I also am going to try out to see what it will look like when I try to put the Fibonacci levels, the moving average, and the trend lines all in one chart. See what happened, because it would help visualize the support and resistance, but I personally think it will get kind of messy. So we'll try it out, but I'm sure it won't look pretty. Any questions so far? All right. Next week, I'm not sure what I'm going to be doing, if I'm going to focus more on the candlestick patterns or focus more on the continuation, or maybe just do some analysis at that point, running the new reports that I hope to generate by this time next week. Because those are really handy, because it's all encapsulated into one spot instead of jumping around from chart to chart. It'd be similar to the other reports that I generated a few weeks ago, where it was all done, it was all sorted, and the cryptocurrencies with the right trading opportunity based upon another form of this, but this is more precise. And again, we can set pricing levels on this using the Fibonacci levels, and we can always swap out the averages as a support and resistance line, as well as the trend lines as well. Any questions so far? I'm going to wait it out a little bit. If not, then we'll call it a night. Anybody? Because I know there's just a delay between YouTube and my real time here. Anybody? 1, 2, 3. No? Okay, so I'll do a going once, twice, 3 times and wait a little bit for a question. If not, I'll give her a wrap. So I'll do a going once, going twice, going 3 times. Anybody? No? Okay, so we'll give it a wrap tonight. And thanks for coming out, and we'll hopefully see you next week. Moving out.